Onto your markets news now. Asian stocks largely traded higher following Donald Trump's win of the U.S. presidential election. As a result, cryptocurrencies were seen surging ahead, with the Bitcoin trading above $75 overnight. Chinese trade numbers were also positive, showing that Chinese exports rose by 12% in October, registering a trade surplus of $95.3 billion. The Nikkei share average ended the session down 0.25%. The Hang Seng index rose by 2.02%, while the Shanghai Composite Index ended the session up 2.6%. U.S. stocks reached yet new highs in yesterday's trading following Donald Trump's victory over Kamala Harris in the U.S. presidential election. All the major indexes rose sharply, with the Dow Jones the standout performer. Leading the market rally included sectors like financials, energy and industrials. Meanwhile, market players will be eagerly anticipating the U.S. Fed's call on interest rates later today. The Dow Jones Industrial Average leaped by 3.6%. The S&P 500 closed up 2.6%, while the Nasdaq Composite Index registered gains of 2.95%. The JSE is making a comeback to trade positively today. The all-share index is up 0.6% at around 85,864 index points. The rand is trading at 17.42 against the US dollar, quite strong vis-a-vis yesterday, 22.55 against the British pound and 18.76 vis-a-vis the euro. The price of gold is trading at $2,665 an ounce, platinum at $988 an ounce, while Brent crude oil is trading at $74.47 a barrel. Well, for more on the markets, I'm joined by Simpiwe Littlejane. He's a investment strategist at ABSA Investments. Thank you very much for joining us, Simpiwe. So the U.S. market has overwhelmingly shown its enthusiasm for a Trump presidency, despite concerns raised previously about higher inflation prospects. And then on top of that, the market players are also awaiting the Fed's next decision on interest rates later today. Your thoughts?
Yeah, I think U.S. markets did enjoy quite a good rally yesterday. I think first things first is that the election uncertainty that was there has now dissipated. So market participants that may have been on the sidelines, are now more comfortable to enter the markets, given that there's a little less uncertainty. And then in terms of, Trump's victory, I think one of the key positives for markets that they are looking out for is, of course, the prospects of potentially tax cuts, or at the very least, certainly not expecting any tax hikes on the horizon, because that was essentially what the opposing party was proposing. So that's really one of the positives as far as the outlook is concerned for markets. And then another quite important issue is easier regulation around energy, around healthcare, and some of the other sectors, including financials. And we did see quite a strong rally from banks yesterday, particularly as they're expecting that operating conditions might be a little bit less restrictive. So that's really some of the key drivers. But as you highlighted, some of the key concerns around, the new regime is, of course, reignition of the trade tensions, particularly with China, and some of the negative impacts that can have on company margins, and then, of course, the inflationary pressures as well. But as you also alluded to, markets moving more their attention towards the interest rate decision later on, and markets penciling a 25 basis point cuts from the US Fed there.
Yeah. So yesterday we saw that the Chinese and Hong Kong stocks fell quite sharply as it became clearer that a Trump victory was on the cards. But today we see the opposite of that, with those indexes up on the day. I would have thought there'd be a lot of anxiety, particularly in the Chinese market, given Trump's plans to lob further tariffs on their goods.
I think when we're looking at the Chinese markets, really the main concern at the moment that markets are paying quite close attention to is how does the Chinese officials respond to some of the challenges that the economy is facing, the factors that are weighing down on the economic growth that hasn't essentially met that 5% target, and really the key challenges around the property sector and the spillover effects that it has on the overall economy, as well as consumer demand propensities within the economy. And so what markets are really looking forward to is, throughout the week, there were talks that the Chinese officials are meeting, and we are set to potentially get announcement around a fiscal stimulus. The first stimulus that we saw was around the monetary policy side of things. The expectation is that we might see a fiscal stimulus. And really what markets anticipate is that in response to potentially some of the harsher conditions from a trade perspective, that might actually motivate, Chinese officials to come up with a much stronger stimulus package. But of course, all is yet to be seen.
So what's the story with the rand? It lost a lot of ground yesterday, following the news around Donald Trump, and it seems to have retraced much of its losses. It's doing quite nicely, trading at about 17.47 against the US dollar.
Again, I think a lot of it is a bit of election uncertainty jitteries, but now all of that having dissipated does seem things calming down a little bit when it comes to the rand. So it is holding up quite steady. ABSA research is quite constructive when it comes to the outlook for the rand, particularly if we're considering easier monetary policy going forward, as well as the fact that, our monetary policy locally is expected to potentially lag a little bit. And so interest rate differentials of our bonds will look fairly attractive to foreign investors. So there is quite a lot of tailwinds. And then, of course, this is coupled with some improvements in local economic fundamentals and as well as risk on sentiments globally. But any of these factors, if they do surprise negatively, can weigh on the rand.
All right. Thank you so much for that. We're going to leave it there. That was Simpiwe Letlojane. He's an investment strategist at ABSA Investments.